If Offplan was booming like before, we wouldn't be talking about mortgages. In this video, we're breaking down why exactly developers are offering mortgages for their Offplan projects and whether this changes anything. Developers, especially Emar, have officially partnered with major brands such as Emirates NBD or ADCB to introduce embedded Offplan mortgages directly into the buying process. And this is happening right after the US-Iran war shook investor confidence across the region. So the real question is, will off-plan mortgages bring the rush back, or are they just a temporary stimulus? Let's break it down. And as always, bringing you the unbiased truth in real estate. If you like this kind of videos, hit that like, subscribe, and let's get into the video. Since the US-Iran war escalation at the end of February 2026 this year, Dubai's off-plan market has clearly slowed. According to AGBI, within the first 2 weeks of the escalation, developers began shaving prices by as much as 10%. Dubai Creek Harbor projects, where I chose to live, dropped by around 9%. Benghazi hosted events offering similar discounts and incentives. And most importantly, brokers were heavily incentivized. Real estate professionals overall described demand as extremely slow, at least at the beginning of this escalation. AGBI also notes that the off-plan sector is 69% of the total transactions in real estate last year, 65% of the total transaction value. That means off-plan is not just a segment. It is the actual engine of Dubai's property cycle. And of course, when the engine slows, developers will respectively respond. And again, while I'm not saying this will last or this affected some other specific areas, just speaking purely on the off-plan, what we observed, what's in the news, and what the data shows us. Because if we would look at the ready segment, surprisingly, there is a lot of traction going on, and especially right now. So I'll get into that in a second. While there were some projects already accepting off-plan mortgages in the past, so developers partnering with banks, now Emar officially announced landmark partnerships with banks such as Emirates NBD and ADCB. They stated, "We are embedding bespoke mortgage solutions directly into the heartbeat of home buying process for all of our off-plan projects, not just a select few." Now, this is not really a marketing fluff. This is a structural, deliberate move, and it's going to be applied right away. At the same time, Emirates NBD expanded early mortgage access, and Property Finder outlined how mortgage process for off-plans will operate. Banks are clearly stepping in to support the liquidity. Here's how the structure generally works. Banks finance up to 50% of the property value. That's why the buyers must contribute at least 50% upfront. But that doesn't mean you have to pay it right away. You can choose one of the off-plan payment plans and just make your payments until you reach that 50%, and only then you can actually apply for the off-plan mortgage. Or even better, if you finance your off-plan payment plans until the handover, you can apply for a normal mortgage and get even more financed by the bank, not just 50%. The bank funds are usually released when the project is around 30 to 40% complete, versus previously when it was 70 to 90% complete. Funds are released in tranches directly to the developer. Now, an important note is that only the tier 1 developers usually will qualify, or at least in this case, definitely only those. Emar, Nahil, Shoba, Meras, Damak, and Benghazi. Maybe there are some other developers which I don't know of, but this is generally what I've found on the web and speaking to all my agency network. The minimum salary usually has to be between 10,000 to 15,000 dirhams. Debt to burden ratio, or DBR, also known as debt to income ratio, basically how much debt you can have versus your actual monthly income, is capped at 50%, which means that in the case that you're earning 10,000, you can't get a mortgage, or you can't have debt more than 50% of that, which is 5,000 dirhams. Loan must mature by age 65 to 70. So if you're slightly older, let's say, than me, then you need to account for how many years you can actually get this loan for. Rates are currently ranging in between 3.49% and 4.49% with the salary transfer. Obviously, the rates could go up if you are a non-resident, or if you opt in for some specific complementary options. Some banks now offer pre-approvals up to 12 months, which is really good for you as a buyer because you have this 12-month pre-approval, so you can just choose your property in a relaxed, calm way. This is clearly designed to remove friction, and I'm super happy this is being implemented. Now let's talk of how you can actually apply if you're considering this. If you're a serious buyer considering this route, here's the typical process. First, you need to see and get a pre-approval early before actually getting into that payment plan. So you need to go and speak to the banks and see if you're actually going to be approved later on in the process. Approach these participating banks such as Emirates MBD, ADCB, and some other, and secure a pre-approval based on your income and DBR. Or at least you can ask if you will be able to secure this pre-approval in the future, and you just want to get into a good payment plan right now, and then in the future you know for a fact that there is not going to be any kind of unexpected situations. Step 2 is choosing an eligible developer. These mortgage schemes are restricted to tier 1 developers, so you need to make sure that they will actually offer these. Then you need to pay at least 50% contribution, so you can either do it upfront if you want for one project. Sometimes you can actually benefit of it because you might get a better price overall for that property. However, most of the cases you would actually go in for a long-term payment plan. So let's say you will have to pay 10% and 5% every few months. And up to the moment you get to 50%, that's when you can actually apply and get a off-plan mortgage. Then you will have the bank milestone review. Once the project reaches roughly 30 to 40%, and usually you can check this specifically in DLD, you have a full report on the project construction progress, then the bank will release the funds in tranches directly to the developer. The last step, you have the final handover and the mortgage activation. Once this full process is completed, then the mortgage officially begins. That's when you will have to pay your monthly payments to understand what is the remaining amount that you have as outstanding. But before getting into that, it is important to note one specific aspect of this process. Dividends or even rental income alone doesn't qualify as verified income. You must have a verifiable income such as a salary or structured self-employment income. Now, navigating this properly requires coordination between the bank, developer, broker, legal documentation, and payment structure. This is where my trusted UAE agency partners, Wimb Real Estate, come in. They work closely with developers and banks, and they can guide you through identifying eligible projects, structuring the deal properly, coordinating the mortgage pre-approvals, aligning payment timelines, and avoiding common pitfalls. If you're considering off-plan financing, having the right brokerage team is critical. Check Wimb Real Estate out in the links in the description below. Let's be clear, off-plan is sentiment-driven. Unlike ready property, you cannot rent it immediately. You cannot use it even, and you lock in capital for 2 to 3 years at least. You depend on future stability. War uncertainty on all this kind of escalations makes the investor hesitant to commit long-term. AGBI also highlighted that the branded residences are particularly sensitive to geopolitical shock. Luxury branded residences are particularly vulnerable because ultra-high net worth individual buyers, they relocate quickly if regional stability declines. That's exactly what I mentioned about even Creek Harbor and areas where there are more entrepreneurs, where there are more freelancers, or basically people working on their own, having their own terms. If they want to relocate, they will. So these kind of properties in this kind of areas, even some villa areas and townhouses, if entrepreneurs live there and ultra high net worth people live there, they will relocate immediately. That's why off-plan in this segment might be more effective. So what do the developers do? They obviously will introduce some incentives such as discounts, flexible payment terms, and mortgage partnerships. This will stimulate the liquidity and make it more attractive for those kind of buyers. Here's where I stand. I think this is an interesting incentive, and it's much needed in this region. For buyers who don't want to deploy 35 to 40% upfront, especially foreign buyers, because they can't get the 2080 LTV or 1585 like the Emiratis, they have to go for the 35 minimum. For buyers who prefer smoother capital structuring and want some flexibility over 2 to 3 years, it can make the entry easy, and it definitely does. But an important thing to note here is that over the past 2 to 3 years, off-plan has been massively overpriced. And I've been speaking about this on this channel since forever. Not because I like it or don't, it's because I look at the data and I see how much Offplan was overpriced versus the ready alternative options. I would love to get into more Offplan projects, but they have to give some incentive to the investor because you're waiting 2, 3, 4 years, sometimes even delays. You have to be better incentivized to get into those projects. To wrap it up, in many cases, off-plan one-bedrooms were significantly above the ready alternatives. And by that, I mean 50–80% over the ready alternatives. And that's just looking at Property Finder and Bayut, not even taking into account the negotiations. Investors were paying a premium to wait. That doesn't add up. Risk reward became distorted. For me personally, off-plan only becomes viable when it matches ready pricing or provides a meaningful incentive for 2 to 3 years wait. Financing alone doesn't justify the overpricing. So while I'm super happy of these incentives happening, of financing for off-plans being introduced, I would like, particularly as an investor, to be more incentivized to get into these projects. Maybe better pricing, maybe some extra waivers, I don't know, but it has to be better incentivized so that I actually park my money into these projects. I give my trust, to these developers to deliver a project that will give me some ROI. I don't want it to be delivered and be priced the same as the ready segment. I'm at the stage where I purchased it, so I'm gonna be losing money, not even making any ROI. I mean, you get the story. Nevertheless, the question is, will it revive this rush that we had over the past years? I think it may stabilize the segment, but to revive this crazy rush, I don't know. That really depends on regional stability, whether the price correction will continue, whether the delta between ready and off-plan will narrow. If pricing adjusts realistically, this will obviously help. If pricing will remain detached, this will not help it. And this is where unbiased analysis really matters. If you're considering whether off-plan financing is the right way for you to go, comparing the ready versus the off-plan math, structuring capital properly, or simply cross-checking your thinking. Through Agora Advisory, we offer tailored advisory packages, one-off strategy calls, investor-level deal evaluation, full sourcing support, and scenario modeling before you commit. Because this is not about hype, at least not anymore. It's about the math, the right numbers, and your positioning. All the links, as usual, in the description, so do reach out and let's get the best deal for you. So as a final thought, off-plan mortgages definitely makes it easier for us investors and buyers interested in the off-plan market here. It is a strong liquidity tool. They reduce the friction, but fundamentals still matter. If pricing becomes rational again, this could support momentum. If not, it simply delays the adjustment. And as always, bringing you the unbiased truth in real estate. I hope you like this kind of videos. Leave all the comments below and subscribe to see more in the future. With that, I thank you for watching and I'll see you in the next one.